Good evening, everybody. I wanted to make a video here on something that we have been working on. It involves one of the Euro models that we use, the ultra aggressive model. And one of the things that we've been trying to work out with the ultra aggressive model is trying to alleviate some of the losing trades, because anytime you've got an aggressive model, you are going to be in and out of the market more often than you will with a more conservative model, and therefore you're going to increase your number of losing trades. So what we were able to come up with, and I'm going to show examples from the last 2 days, was what we're calling a probability calculator. And basically all it is you are looking at when you get a trigger, right, like here the flow indicator was red, and you touch the upper band. So now you have a short trigger. What you're looking at is the number of bars between the trigger and where it last touched the bottom channel. If the trigger bar is either a 6 or a 9, 6 or 9 bars away from where it touched the bottom, or in the case of a long position where it touched the top, then the odds of a profitable trade in that direction increase dramatically. So really you could take an aggressive model like this and have a relatively conservative theme about it because of how you're filtering the signals. So here's a situation right here. As you can see, this was 9 bars from the touch of the bottom to the trigger bar, and you can see it was a very, very good trade. Very nice short trade. Here was an instance of a stop out. You had the touch down here of the lower. The dots are red, so you continue to look for short positions. This touch was 6 bars from the touch of the lower. So you would have gone short there, and ultimately you would have been stopped out. It's a 4-tick stop on this, so it's a very tight stop. Here's another situation, 6 bars from the touch to the trigger, and that was decent. That was about 15 ticks, 13 to 15 ticks. Here is another situation. Now the tables have turned. Notice how the dots are green now. So now you're going to be looking for long positions. And from the touch of the top to here was 9 bars. This was 6 back here, and you didn't have a trigger, so it would have been nothing. But here you had the 9, and you can see what transpired out of that. Very nice move. Here's another situation here. The dots are still green. Touch of the upper to where you had your trigger, 6 bars, and you had a move of, roughly 11 ticks. This trades just like the regular Euro models that we trade as far as times, 4 a.m. to 10:15 a.m. Here's another situation. This was the last one for the 8th. And this is the touch of the upper, and 6 bars later you came down and had a trigger bar, and that was your end result. Very, very nice move to the upside. Talking roughly 40 ticks. 40 ticks from the trigger to the high. As I have said, it's no guarantee that that's what you're going to get. It's just an example. Okay, so you start out the 9th here with a touch of the upper band, and then this was 6 bars. In this situation, you would have gotten out of your first position on the long, and your second and third would have been stopped out. If you want to open up your stop a little bit, you can open up your stop to 6 ticks, and you will catch more of these moves. but you are putting yourself in a situation of more risk with that larger stop. And this is an interesting pattern that we came across, and that is a 6 within a 9. Here you touched the upper band, you came down, and you reversed on the 6. You started going in your direction. That's 4 ticks higher than where you would have entered on the 6. So it's hard to say whether or not you would have been filled. In this situation, we're going to say that you got stopped out. So then if you got stopped out, so we're going to say that you got stopped out. You got back in at the 9. This was the 9, and you can see it's a nice move. But in this particular situation, there's a couple of things that could transpire. Let's say that you didn't end up getting stopped out here, and the 9 came down, and you saw a trigger on the 9. That just adds extra credence to your trade. Here's another situation of a 6 and a 9. This 6 definitely got stopped out, and you had a 9 later on, and you can see it was a very nice move. So you're starting to see a pattern with that. The 6 and 9 is that if the 6 gets stopped out, the event after the 9 is typically very nice. And here is the last one for that day. You touched the upper band here, you came down, touched the lower band, 6 bars away from the touch of the upper, and your dots are green. So therefore, you have a long position. In this situation, you would have gotten out of your first and second positions, and you would have been stopped out of your third position at break even. So I just wanted to show you this, especially the people in the room. They're going to see it tomorrow, and it's still a work in progress, but we have gone over about 3 months, and it's prevalent. So there's definitely a pattern there. If any of you want to see these strategies and or models live for 2 weeks, you can get a free trial of the trading room. Just go to the website at www.tcfreetrial.blogspot.com, and there's a link and a password right there for you. You don't even have to enter any personal information. Or you can send me an email at tradecapture@gmail.com. So with that being said, good luck on your trading tomorrow. I look forward to seeing more of you in the trading room, and everybody have a good night.